Hey everyone, welcome back to Corporate Decoder. Today, Blue Owl Capital Corporation BOC just filed an 8K report about their annual shareholder meeting, and I am seeing a few interesting details in the voting results. Quick note, this is not financial advice, just my take on public filings for educational purposes. Shareholders elected directors and approved their auditor, which is pretty standard, but the breakdown of the votes gives us a small window into shareholder sentiment. So this is a current report filed on Form 8K telling us about events that happened very recently. Specifically, the company held its annual meeting of shareholders on the 25th of June 2026. The company is Blue Owl Capital Corporation. They are primarily involved in asset management, as we've seen in previous filings, and trades under the ticker symbol OBC. Their common stock is traded on the New York Stock Exchange. This is not a surprise, as it is a fairly large company with a market cap of over $5 billion. The first main item voted on was the election of 2 members to their board of directors. These directors are elected to serve for a pretty long term until the 2029 annual meeting. This suggests a desire for stability on the board. Let's look at the votes for the 2 directors. Kaye received 168 million votes for and 67 million votes against. Victor Woolridge, on the other hand, had a stronger showing with 179 million votes for and only 56 million against. Now, it is important to notice the broken non-votes here. For Kaye, there were over 126 million broken non-votes. For Victor Woolridge, it is the same number. This means that for these shares, the brokers who hold them in street name for their clients did not receive voting instructions. This can sometimes be a sign of disengagement from some shareholders. The fact that both directors got a significant number of votes against them and a very large number of non-votes does indicate a notable portion of the shareholder base is not fully endorsing their leadership. The second item was to ratify the appointment of KPMG LLP as their independent registered public accounting firm for the fiscal year ending the 31st of December 2026. This is a pretty standard procedural vote. The results here are overwhelmingly positive. They received over 357 million votes for ratifying KPMG. Only about 3.5 million votes were cast against it, and about 4.8 million abstained. There were no broken non-votes listed for this item, which is common for auditor ratification. This shows strong confidence in KPMG as their auditor. The report is signed by Jonathan Lamb, Chief Financial Officer and Chief Operating Officer. This is a routine signature for these types of filings. Looking past the numbers, the board elections, while passed, show a notable amount of opposition and abstention. This is not a red flag for the company's immediate operations, but it is something to keep an eye on for future shareholder relations and potential activist interest. Companies often strive for near unanimous support in director elections, so the significant against and broken non-vote tallies are noteworthy. The overwhelming support for their auditor KPMG is a positive sign of continued regulatory trust. Overall, this filing is mostly procedural, confirming the outcomes of their annual meeting. The key takeaway is the mixed signals from the director elections, suggesting some shareholder dissatisfaction or perhaps just a general apathy from those who did not vote. That is my take. Stay decoded, and if you found this breakdown helpful, hit that like button and subscribe for more. The tools I use for research are linked in the description.